U.S. stocks finished lower on the first trading day of the year after opening the session higher. Investors started 2025 dealing with the cross-currents of solid labor market data, a rising dollar, and tumbling Tesla shares. The Dow slipped 1/3%, while the S&P 500 and the Nasdaq fell a little less than that. Shares of Tesla lost 6% after the company reported its first annual drop in deliveries, as incentives failed to stem a decline in demand for its aging lineup of electric vehicles. While a report from the Labor Department showed initial and continuing claims for unemployment benefits both fell last week. That supports the narrative of a solid jobs market and adds weight to the possibility that the Federal Reserve could let its key interest rate stand at this month's policy meeting. Baird investment strategist Ross Mayfield says he expects to see some volatility in stocks, but thinks it's full speed ahead.
I think we're still in a bull market here. I would say that any pullback based on something like the 10-year or something like the dollar strengthening is buyable, right? A pullback is buyable because the fundamentals of the economy are solid. The consumer keeps spending. Third quarter GDP was strong. Fourth quarter GDP is tracking strong. Initial jobless claims, have been forgotten, but they came in this morning extremely low. So you have a solid labor market, a strong consumer. You also have corporate profits expected to rise double-digit percentage points, and not just the Magnificent Seven, but the other 493 as well. So you have this really solid fundamental backdrop.
Other stocks on the move included Apple, which dropped about 2.5% after the iPhone maker offered rare discounts in China in order to compete against domestic rivals. And SoFi Technologies plunged 8% after broker KBW downgraded its stock on valuation concerns. Shares of Tesla fell more than 7% Thursday morning after it reported its first decline in annual deliveries. It handed over 1.79 million electric vehicles in 2024, down 1% from 2023 and below the 1% gain predicted by analysts. Incentives failed to boost demand for its aging lineup of models. CEO Elon Musk expected promotions, including zero interest rate financing, to power a slight growth in deliveries in 2024. Reduced European subsidies, a shift in the U.S. toward lower-priced hybrid vehicles, and tougher competition from China's BYD have pressured Tesla. In response, Musk pivoted Tesla to self-driving taxis and backed President-elect Donald Trump with millions of dollars in campaign donations in hopes that it could bring regulatory relief for the company. Deliveries in the fourth quarter also dropped. With self-driving technology still years away, analysts have said Tesla will have to rely on cheaper versions of current cars and the Cybertruck to drive sales growth in the near term. The truck, known for its trapezoidal stainless steel exterior, has been showing signs of demand weakness, analysts have said. Tesla's shares surged 62% last year.
9 out of 10 new cars sold in Norway last year were powered by battery only. It's now within touching distance of its target of only adding electric cars to the road by 2025. Top-selling brands were Tesla, followed by Volkswagen and Toyota. Oil-producing Norway penalises petrol and diesel cars with high taxes and exempts EVs from import and value-added taxes to make them more attractive. Experts say the policy has worked because it's been consistent over time, maintained by governments of various political persuasion. Also helped is the fact that Norway does not have an automaker lobby. Christina Bu is head of Norway's EV Association.
In other countries, you see that someone put in some incentives or some tax exemptions, and then they pull them back again. To do this and to sort of succeed with this, you need to sort of keep at it for a long enough time, and it's working. And I think the recipe that Norway has used, it's definitely transferable to other countries as well.
The European Union has decided to ban sales of carbon dioxide-emitting cars by 2035, but it may allow sales of cars that run on fuels made from captured CO2. Norway's policies mean that fully electric cars last year overtook pure petrol cars on Norwegian roads. They accounted for more than 28% of all cars driven in the Nordic country as of December. But the rising share of EVs on Norwegian roads mean other sectors have to adapt. At fuel stations, more and more petrol pumps are being replaced with fast electric chargers. And for drivers, switching to an EV means it can take a little longer to charge a car in winter due to the cold weather.